Okan, how you doing, buddy? All right, so great to have you back. I just let the community know how you nailed the lows in euro, and you thought we'd trade at least 109. So has the story changed in euro, or are we looking at all pullbacks just mean buying opportunities for higher levels in 2024?
Exactly. About 15 minutes ago, a gentleman talked about a trader at the
Oh,
CBOE desk or someone,
oh
I
yeah,
don't
the
remember.
yeah, SIBO. That's a
See, it's,
Chicago Board of Options Exchange.
yeah,
Yeah.
yeah, yeah. And he mentioned that trader is expecting the euro dollar to go up to 120. And,
Okay.
and I totally agree with him. And I'm going to share with you why I believe so
Okay.
today.
All right. That'd be great. I want to show you how he gets there. All right.
Sure.
Because that's something I'm talking about. I'm looking to buy it at 107-ish. I think we'll still get a break and Dixie might still trade up to 105. So this is how Euro gets there. It's off the weekly.
Yeah, exactly.
So,
What
oh, you
I
got the
believe
same thing?
this. Yeah, I
This
believe I'm
moving average? Yeah. So the
not to do nothing to do with the moving average. My reasoning is has different
All
story
right.
about it.
Well, I'm just
Uh,
giving you a measured move from basic technical analysis, right?
oh, yeah,
So 104, 111 and a half, about 7.5. You tack that on, it gives you 120.
exactly.
It's a breakout over the 1140 high.
Yeah.
Um, so I could see that, and I'm interested. I love it actually, Okan, when people come to the same conclusion using different methodology. To me, it's almost like confluence. That different modes of coming to the same conclusion, pointing to the same thing, gives me even more conviction on the trade. So go ahead and share the screen and let's see what
Sure.
you're looking at.
Of course, sure. 1 second.
How are things going in Turkey?
It's a very, very choppy environment here.
Yeah.
Financial markets
How
are
did
very
you deal
choppy.
with the currency crisis with what happened to the lira over the last several years?
Well, what
How,
happened was, what happened was that the Turkish lira was so much under pressure because there was too much demand
yeah.
for the foreign currencies, and the reason why the Turkish lira has been under pressure is because expect imagine a country where the inflation is about 50%, but the interest rates are around 30%. So there's minus 20% real return in Turkish lira. So nobody's willing to buy Turkish lira. So everybody goes long for the foreign currency.
Okay.
And
So
two
in your
years ago,
daily life, how did you deal with it, um, are you constantly converting to US
uh,
dollars and other currencies every time you get paid liras?
what I do in particular is I buy stocks. So stocks is a very good protection against weaker Turkish lira. The reason is
Okay. All right.
as Turkish lira gets weaker, um,
Yeah, it
the
inflates
foreign
stocks.
investors, yeah, it inflates stocks like it's in the US, but
Right.
the magnitude is larger in Turkey because the inflation and the interest rate difference is very, very wide.
Okay.
For
So that
example, nowadays, yeah, go ahead.
No, okay. So, I understand how you're the investable part of it, but how about the daily life part of it? When you go to a grocery store, or you have to pay a landlord or a
Yeah.
creditor. How do you go about that with a currency that's been collapsing for years?
Okay, what happens is every week you can see changing prices based on the inflation. But the problem, Dale, is the inflation, the announced inflation is, let's say, nowadays it's about 60%. But the actual inflation that people feel is double than that, like
Yeah, right,
120%.
right,
That's a big problem. And because of that, what happens is everybody is when they get the currency, let's say when they get their salaries or their paychecks, whatever it is,
right. right.
They stock the goods that they're going to already they buy the grocery store stuff um, in huge amounts before the prices go up. So they
I
are
see.
actually stocking. Yeah,
Okay, they're
that's how
hoarding.
people exactly.
Okay.
Yeah,
All right.
and
Wow.
that of course is fueling the inflation also. So when people buy groceries or anything like not even only groceries, everything like cars, everything with the expectation that the prices are going to go higher, then the prices really do go higher. Okay. So that's the problem. We cannot beat the expectations just because the interest rates are always below the actual inflation rate.
Wow,
So
what a
that's the problem.
lot of duress for a nation's population to deal with. And you're not the first. I mean, it's happened in South America quite a few times, Argentina, Brazil, these types of, it's happened in Thailand when you had the Thai baht situation. And you know what? Americans say that could never happen here, but it's almost like we're seeing the beginning stages of it already.
Dale, that's really almost impossible that something the same thing can happen in the US. The reason
Well,
is
that's
because
good. The best news I heard all year.
no, because the productivity rate is high in the US and people
Okay.
are producing and also there is a sound monetary policy being applied in the US. And not only
Really?
the monetary policy, of course, I think Federal Reserve is very successful. And also not only the political, I mean the monetary policy is successful, but the production policy is successful.
Okay.
It's I mean you can
So that's
only
why
keep the
everyone wants to come here.
exactly. So because there's productivity is high and there's jobs available and there's demand for American goods and services. So for as long as that continues, you should have no problem
Okay.
about the future.
So from Turkey, does America look strong, or does it, like our adversaries say, looking weaker?
Well, every country has its
Cycles?
cycles.
Yeah.
Yeah, I think U.S. is approaching to a cycle where the economic cycle is going to go from this level to a lower level in terms of production. I mean, I can see this from the Federal Reserve's policy. As you can see on my screen that I'm
Yeah.
sharing with you, if you see that although the inflation has been slowing down a little bit in the past like 6 to 9 months,
Yeah.
the Federal Reserve is still keeping the rates at 5.5%. So there's a plateau here, you see?
Yeah.
And for this reason, only for this reason, if you look at my chart, you see this blue line is the break-even rates in the US for the 2 years period. You can see this as an inflation expectation for the period of next 2 years. You see,
Yes.
the inflation expectations are low. All right, so
Yeah.
it used to be before the monetary policy started, the tight monetary started, it used to be at 4.81%, like around this rate
Yeah.
area. And
Yeah.
now it is at 2.35. So, and it
Right.
has been around these levels for a long time. Why? Because the Federal Reserve rates has continued to increasing rates.
So do we
Okay,
have a
so this,
reversion to the mean where the Fed drops rates and uh, I don't know, this is the 1 year and they
uh,
converge? Do they converge, the Fed
I
and the
think at
2 year?
some point, the
Okay.
inflation expectations have to go up. The reason is you need growth. Okay. So
Yeah.
at some point, the Federal Reserve, once they see that the inflationary pressures are really not a threat to US, economy, they're going to start to ease the rates. I believe starting from the September, some time in between September and December. So when the Federal Reserve starts to ease monetary policy, then I think that this break-even rates will start to increase.
Okay, so
And
nothing in March. You're pretty far out there compared to the narrative in the market where people think they're going to start dropping rates in the spring or summer. You're all the way out into the fall.
I think it should start from starting from fall
Okay.
because the reason is I mean you can if you look at U.S. data coming, they're very strong. I mean sometimes they're weak, sometimes they're strong. You see the inflation data is coming weaker. That's fine, but
Yeah.
uh, but on the contrary, you see some economic data coming in stronger, and that's strange, right? So, and I actually that's not strange. That's because there's productivity in the US. So the productivity, high level productivity, is keeping the inflation pressures low. Okay, so
Okay.
but still, the US data is coming strong. For as long as they come strong, I think US will maintain this policy for at least about 6 months from now, at least for 6 months from now. So I think
Okay.
it should start from September.
So what's the euro do between now and September, which is pretty
Okay,
far out?
I think let me explain this uh, from the commodities point of view, if I will, if I may.
Sure. Sure.
Uh, I'm now sharing with you another page where I have this 2 years break even with the white line and the dollar index with the blue line, right? So
Okay.
as you can see that uh, over a long period of time, you can see that these two indices are working against each other. So when the break-even rates go up, the dollar goes down. So that's always this story. Now, as I mentioned to you, that coming into, I mean, I believe that starting from June or July, sometime around that time, the break-even rates will begin to increase. So it should start to put some pressure on the dollar. So and why I think so is because again, um, once the Federal Reserve starts to keep once the Federal Reserve, I'm sorry, one second, please. I'm sorry.
Okay. It's all right. Live
Uh,
TV.
I, I, I I am I'm here with some kids. Sorry.
Yeah.
Okay.
It's okay.
Once the Federal Reserve starts to decrease the interest rate, I think, and I think that's going to be around September. I said.
Yeah.
I think the break-even rates are going to go up higher, and that's going to pull the dollar down.
Okay.
But until that time, until this happens, I think that we will see some strength in the dollar, and the reason is
Interesting.
let me show you why I believe so. Is if you switch to the next page, sorry, this one. This is crude oil, right? Do
Yeah.
you realize that all right. So this blue line is the crude oil price, the
Right.
nearby price,
Yeah.
and this is the convenience yield of the crude oil. And if you realize that the break-even rates are are are, are, um, working against these two, right? So the break-even rates, the crude oil prices are working against each other. Uh, Now, since I believe that um, in the near term, because the Federal Reserve is going to keep its policy, is going to maintain its policy, I think that uh, that in the short term, this break-even rates are going to stay around these levels. So it's not going to go higher in the near term. and we can see this that the from I mean we can see this from the commodity world, from especially from the crude oil world, because as the break-even rates are going to go down from today until the next 4 or 5 months, I think that the crude oil prices will start to inch a little higher than these levels where it's staying. Nowadays, I think it's $75 right now, $76, 76,
Yeah,
67.
up there, high
Yeah, so
70s.
that's
Yeah,
yeah, exactly. So I think it's going to go up to 80 or uh, uh, price bands where it's going to stay between $80 and $75 in the next couple of months, because $70 is really, really cheap for the dollar for the time being.
yeah.
And that's so that's the reason why we are going to see
Dollar strength.
that's all the dollar strength. Yeah, exactly. So it's not going to go higher than $80, right? So for as long as the commodity prices are strong, even if it is even it's between 75 and $80, that's strength for the dollar. It's associated with the strength of the dollar because
So are you talking
still,
about subpar in euro during this 6 month time
no,
frame?
no.
What?
I think we will trade somewhere between 105 and 107. And I think it's
Okay.
going to be a great buying opportunity for the euro dollar.
Yeah.
I mean, if you're asking
Okay.
me about the euro dollar, I think it's going to be a good opportunity for the euro dollar to go long from 105, between 105 and 107.
Okay.
And let me tell you why I also think that uh, starting from maybe 3 months from today, you should be buying the euro against the dollar, is because if you look at this chart where you see, okay, this chart is showing you the gold and silver performance. If you look at, okay, this blue line is the convenience yield for the silver, and this red one is the convenience yield for the gold, and this one is the dollar
Dollar.
index.
Okay.
As you can see that the silver convenience yield being higher is associated with a weaker dollar, right? So, for
Right.
example, if you look at this blue line, which is the convenience yield for the silver, it
Hmm.
goes above the convenience yield of gold. You see this red one? So
Yes.
it goes there and and it waits for about 2 months there. If and then once it maintains this situation where the convenience of the silver is higher than the convenience of gold, then you start to see uh, weakness in the DXY in the dollar index. I mean, do you realize this that the blue line is getting higher than the red line, and then after about 2 months, you see the dollar index, which is this white line, going lower. Okay, so
Yeah.
this area. Now we're seeing the same story. You see this blue line, which is the convenience of silver, is going higher than the convenience yield of gold, right? And and it's
What
and
does it
because
mean,
this
convenience yield?
con, con,
Is
convenience
it
yield is convenience yield is all right. It is the yield where thanks to which a trader makes a gain for holding the commodity despite its funding costs.
okay?
So, which means that, for example, it means that if you stock any commodity, you're giving up currency, right? So
Right.
once you give up currency, you're actually losing interest rate. So, but the convenience yield is that it is the it is a not
It
it's like an
outpaces the
interest.
yield you would get on the currency.
Exactly. So it
Okay.
is the yield that are expecting to make for holding that commodity despite its funding costs.
Do you like silver here?
Actually, I like silver, but not today. Not for the time being. But I like silver starting from April, March, April, I should say.
Okay.
Starting from then, I think that uh, this situation will reverse, where the convenience yield of silver is going to fall below the convenience of gold, and it will be the time when the dollar index will start to fall.
Okay.
And, and
All right. So, what do you have price levels in silver that you'd be interested in buying? You had it in the euro.
uh,
It's under 22.
I expect the silver to go as low as 19
Okay.
level, and
That'll shake all the bulls out. Yeah.
it will be a very, very good opportunity to go long on the silver until 27.
Oh,
And
so you could marry it then. How about gold?
gold is the same story, but I think
Not as
that is still not a, yeah, not as
silver will outperform vis-a-vis the gold silver ratio.
certainly. And I
Okay.
think we should see gold inching higher as high as maybe 200 until $2,300 or something, or maybe
Okay.
$2,400 in between, somewhere in between that range.
Great interview, Okan.
Thank
Interruptions
you.
and all. And I know I interrupt plenty. You are really a insightful guy. And I don't see one like bar chart on an, or candlestick chart and how you come to these conclusions. And I learn from you new things every time you come here. So I want to thank you for your contributions to FACE over, we've been talking a few years now, for
Yeah.
your giving spirit of coming in and making very good calls and showing, a lot of fundamental reasoning behind them. So, do you want people to follow you, or you're just doing this because you like doing it, coming here to talk to me?
People can always follow me, and they can always ask me questions, send me DMs, their direct
Okay.
messages, or even they can send me messages over the Twitter. I will be very happy to answer their questions, and I'm very delighted to be your host, and I appreciate that. Thank you very much, Dale.
All right. So I'm going to type Okan's X handle here for you guys to really have a great source of people. This guy looks under the surface and uses a lot of rate work and um, intermarket relationship work. Much respect from me, Okan, and I hope 2024 is your best year ever.
Thank you, Dale. The same for you.
And I'll get in touch with you, and we'll talk again in the spring.
Sure, certainly.
All right, and
Thank you.
thanks for telling us what it's like to have boots on the ground in a country with having a 3-year currency crisis.
Yeah.
Pretty interesting, and I hope things improve for your people.
It should improve in the next 2 3 years. Not soon, but we should expect it in 2 3 years on.
Oh, okay. Why don't we wrap it with this? Also, I remember last year you didn't think the market stocks were going to do much till year end. Well, they did plenty. Your view on stocks for 2024?
I think it's going to be a year when we will see a lot of consolidation and repositioning in the funds, and 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 this will keep the maybe maybe because there's this recession going on not in US but in
Europe.
Europe. I think it will put some pressure on the stocks in general, not only in US but elsewhere in the world. but then we should see a lot of strength coming starting from 2000 end of 2024. But this year it will be the time for consolidation, and
Okay.
then from 2024 until maybe 8 years from then, we will see a lot of strength in the stocks.
We'll have 8 good years after 1 year of digesting gains. Wow. That's a
Sure.
okay. That's a
Yeah,
very bullish,
because
optimistic.
inflation is high. Inflation is
Okay.
high. Dale.
So
Yeah,
we have good times until inflation turns into deflation, and you don't see that happening for 8 years.
because the world population is increasing by 80 million people every year. So
Okay.
it's difficult to keep the inflation tame.
Okay. Okan Aybar, my trading warrior brother. Follow him at Okan Aybar. Have a great weekend, and thanks again, Okan. I'll be in touch with you.
Sure.
And everyone else, hope you have a great weekend. Recharge your batteries. You really bookmarked the week for us here, Okan. Very, very nice interview. So everyone, have a great weekend. Remember, don't just count your pips, count your blessings. We do our best to edify traders every day, and hope we accomplish that this week and gave you guys an edge. So see everyone Monday. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.